and it just keeps rising. Soon we will seize over 50 trillion in oil. This is in preparation for the global digital energy reserve.
Did you just hear that? Bibi just leaked what their goal in Iran has been this entire time, and has now confirmed exactly what we saw in the leaked documents just days ago. That the entire war with Iran, Strait of Hormuz closure, and even this oil crisis has been part of a much larger plot from the start. Listen, Trump and Larry Fink are good friends. Larry Fink owns BlackRock, which owns 90% of the S&P 500 and manages over 15 trillion in assets. And now, in order to ensure that they own more and you own less, they are pushing for the tokenization of everything, even natural resources. Now is it starting to make sense? The same reason the US attacked Venezuela is the same reason we are now involved in Iran. These two countries alone hold over $50 trillion worth of oil, and what I just found is even crazier. So pay attention, because this is where the real money is made. Knowing the links between Trump and BlackRock, and Larry's obsession with tokenization, I decided to dig into BlackRock's portfolio myself. And sure enough, I found a token called GDER. I immediately went to Coinbase to check, and saw they have it listed as well, up over 160% in the past week, which tells me that insiders are accumulating before Trump's announcement on the 29th. Because when he announces the tokenization of over 50 trillion in oil into GDER, it will spike to over $10, which means $1,000 at the current price will turn into over 8 million. Comment GDER, and I will send you the CA so you don't miss it. Best of luck.
The IEA have officially described what we are living through right now as the worst oil crisis in history. So why doesn't it feel like it? Well, that answer is kind of terrifying. You see, this is journalist Max Fisher, and he's just done an incredible analysis on the one major thing most people don't think about during times of war: the speed of boats. Turns out, though, it's incredibly important because these huge skyscraper-sized oil tankers transport millions of barrels of oil around the world each day at a speed of about 10 to 15 knots. That's the speed of riding a bike. Now imagine if we relied on someone riding a bike to bring our oil all the way from the Middle East to Europe. We'd be waiting weeks or months for them to cycle here. But that's the pace that the global oil supply chain operates at. So when a major disruption happens, like in the Strait of Hormuz, the impact isn't felt immediately. There are still hundreds of these ships still in transport that left before the war kicked off, and they haven't even reached their destinations in Europe, Asia, and the United States yet. But when those last pre-crisis shipments do arrive, which is around this month, after that, there's nothing behind it. That is when the world really starts to feel the disruption in the market.
Think of it like a bomb that's exploded very far away. We see the flash, but the shockwave hasn't reached us yet.
So what happens when that shockwave does eventually hit? Well, oil means energy, and energy sits underneath almost everything in an economy. And it's not that the world is gonna run out of oil. I mean, we still got 80% of the supply. It's that oil is bought in one big global market. And when a 20% chunk disappears, everyone who still needs that 20% now has to outbid everyone else to get it. That raises global oil prices for everyone, regardless of how much or how little your country imports from the Middle East. And the big problem arrives when that oil becomes expensive enough that industries and businesses start cutting back. If fuel prices get too high, airlines start cutting flights. Factories slow down or shut off because they can't afford the power. Shipping becomes even more expensive, meaning fewer items get sent. And the things that do arrive cost more. So what you end up with isn't just higher prices, it's less of almost everything. Less travel, less production, fewer goods, and a noticeable drop in how much overall the economy can do. And perhaps all of that is becoming more and more clear by the day, because in one of his most intense posts yet, Trump is now threatening to bomb Iran's bridges and power plants today, saying, "Open the effing strait, you crazy bastards, or you'll be living in hell. Praise be to Allah." So yeah, it's going to be a rough next few months, and not all countries will feel it the same. But how rough really depends on how long this war drags on. But of course, as always, I'll keep you guys updated.
As the Iran war has caused fossil fuel shortages and price hikes around the world, China is selling more of its clean energy technology than ever before, smashing monthly export records as countries clamor for a solution to the historic oil shock. In March, China exported 68 gigawatts of solar technology, according to Ember, a renewables think tank. That's 50% more than the previous high hit back in August. Meanwhile, Chinese customs data show that exports of solar, batteries, and EVs rose 70% in March year on year. China is now the world leader in renewables, thanks to decades of massive state investment in green energy, a policy meant to help insulate it from oil shocks like the one the world is suffering right now. That's giving Beijing more inroads in global trade, increasing China's geopolitical and economic influence at a time when energy insecurity threatens economies around the world.
Which country is suffering the most from the oil crisis? The Economist has ranked 15 emerging markets most at risk based on two key metrics: their exposure to Gulf energy and the fragility of their economies. Though not directly involved in the war, these countries face some of its most painful economic consequences. High on the list is Pakistan. The country's economy was already weak. Now it's rationing fuel, has closed schools and moved universities online. In Nepal, long queues have appeared for cooking gas. And these four countries rely heavily on their citizens working in the Gulf, who send home wages equivalent to 5% or more of GDP. To see which country is the most vulnerable, we plotted all 15 on a chart. This axis shows how exposed a country is based on dependence on oil and gas imports and nationals sending money from the Gulf. And this one shows how resilient it is to the crisis, based on foreign exchange reserves and debt. You can see the most vulnerable countries down here. Pakistan, Jordan, and Ethiopia are very dependent on oil and gas from the Gulf. Egypt has a lot of debt. It needs to pay about $29 billion this year, more than half its foreign exchange reserves. Pakistan's reserves are well below the IMF's recommended minimum. They cover less than 3 months of imports. Jordan is similar. It has high debt and relies heavily on the Gulf for oil, gas, and remittances. Even if all these countries avoid a macroeconomic crisis, the pain could still be severe. The World Food Programme warned that the number of people facing acute hunger could reach record levels in 2026 if the conflict in the Middle East does not end soon. To explore the full table of affected countries for yourself, click the link.
Iran reportedly has completely shut down the Strait of Hormuz once again. The peace didn't even last a single day. Just yesterday, the world thought the global shipping crisis was finally over. The route briefly opened, allowing nearly 20 commercial ships and oil tankers to quickly cross and escape the area. President Donald Trump even took to social media to publicly thank Iran, while global oil prices instantly decreased. But just a few hours later, Iranian forces reportedly declared the absolute closure of the strait. The reason? Washington's conflicting signals. While the passage was open, Trump made it clear the U.S. Navy's blockade on Iranian ports would remain in full force. Reacting to what they called unacceptable naval actions, Tehran allegedly responded with a major escalation. And they didn't just issue warnings. Iranian fast boats reportedly intercepted an Indian-flagged oil tanker near Oman and engaged the vessel directly. This sudden incident sent major uncertainty through the waters, forcing dozens of massive container ships to make emergency U-turns and retreat.
Iran offered to open the Strait of Hormuz completely, to trade that with the U.S. lifting the blockade on Iranian ports to allow Iran to sell its oil and to ease the situation in the Gulf. The U.S. President Donald Trump rejected it outrightly, saying that if a deal is not done to cover the nuclear program of Iran, that the American blockade on Iran will remain. Let's watch this video.
They would have opened it up 3 days ago. They came to us and they said, we will agree to open the strait. And all my people were happy. Everybody was happy except me. I said, wait a minute, if we open the strait, that means they're going to make $500 million a day. I don't want them to make $500 million a day until they settle this thing. So I'm the one that kept it closed. We have total control of it. And it'll open when they make a deal or something else happens.
Have you ever seen a traffic jam that could crash the world economy? This is the Strait of Hormuz. Right now, hundreds of massive oil tankers are sitting motionless in the water, waiting on a single decision from Iran. These ships carry 20% of the world's oil, but they are being held back by a new kind of invisible gate. Iran is reportedly demanding that any ship passing
actually happens when the world's largest oil-producing region goes to zero. When people picture this, they tend to talk about it in terms of rising prices. $200 barrel oil, $1,000 domestic flights. But this misses something much larger and much more consequential that is already starting to happen. To understand what that is, imagine if, instead of talking about energy supplies, we were talking about food. Now, if I told you that 1 or 2% of the world's food supply was going offline, you'd probably worry. You might expect to see food prices go up some, but you would think it's basically survivable. But now, if I told you the world had already lost 20% of its food supply, you would think, well, we're about to have fewer people on Earth. The name for this is demand destruction. It's when the supply of something drops so severely that whoever or whatever relies on it, the demand, permanently withers away. And that is what is going to happen to any global economic activity that uses energy, which is like almost all of it. Factories, technological development and production, car and airplane travel, air conditioning, building homes or cities. I'm not saying that those things are going to go away, but there is going to be a lot less of them, like about 20% less once things really bottom out. Let me give you a few specifics that are already starting to manifest. Airlines say they cannot afford to operate and are shutting down many of their flights, so it'll be harder to explore the world. European governments are telling their citizens not to travel for vacation this summer. There's just not enough fuel for it. A number of factories are already closing worldwide, especially in Asia. Semiconductor factories in particular are closing, both for lack of power and because semiconductors use helium, which is a byproduct of natural gas production, so is also going away. Importers expect it to become prohibitively expensive to ship some things abroad, so we'll have fewer foreign goods, less off-season produce, and we'll export less too, so fewer jobs. Construction supplies like lumber are getting too expensive to harvest or import, which means fewer homes getting built, which means existing homes getting more expensive and harder to afford. Many of the essential components to fertilizer also come through the Persian Gulf, things like phosphorus. There are already fertilizer shortages in Asia, so yeah, there will also be less food in the world. All of these things also contribute to inflation. Prices go up, harder to afford things, our standard of living goes down. The architects of this war want you to believe that the way things are right now, today, that's the worst of it. That we just have to ride out a few weeks of high gas prices, and we're going to come out the other side of this war basically unscathed. But what's happening right now is a trick. This lull it's fake. It's hiding the real consequences of this war, which are coming. The people in Iran and in neighboring countries who go to sleep under falling bombs are already living under this war. The thing is that I'm not saying it's the same, but pretty soon, we are going to be living the consequences of this war too.
Everyone thinks that oil shock is over because prices aren't exploding. They are completely missing the truth because this is the largest supply shock in history. In fact, it is twice the size of 1973 OPEC embargo. Right now, 10 million barrels per day are missing compared to only 5 million barrels back then in 1973. And the interesting thing is, it is still going on, the blockade and the oil crisis. Because if we look at the 1973 crisis, it triggered a full decade of stagflation with half of the current disruption, meaning now we have a 10 million barrels per day. Back then, it was only 5 million. And here is what everyone is sleeping on. So far, the market hasn't collapsed because of the strategic reserves, record US production, and of course the demand destructions are cushioning the blow. But those buffers are running out fast. And smart money isn't betting on any immediate chaos. They are quietly positioning for the second wave. Because when the reserves run dry and then demand destruction reaches its limit, the real pain begins. So smart money is quietly accumulating quality US oil producers on weakness and adding to LNG infrastructure, holding gold as the ultimate backstop. This is the calm before much deeper and bigger moves. The 1973 shock, I keep saying it over and over, was only half this size, and most people still won't wake up until the second wave is already locked in. Comment shock right now if you want the exact names smart money is buying before it hits.
The Philippines has become the first country in the world to declare a state of national energy emergency, all thanks to a war thousands of miles away. Soaring fuel prices have left some of Manila's jeepney drivers uncertain how long they can stay on the road.
Imbis na maiuwi na namin yung iba, napupunta sa diesel. Kaya natitira sa amin, maliit na lang.
Iran has closed the Strait of Hormuz to all but a handful of ships. Asia consumes more than 80% of the oil that crosses the strait, leaving it vulnerable to supply shocks. In South Korea, the president has called for a 12-point countrywide energy-saving campaign, asking people to take shorter showers and only use their washing machines and vacuum cleaners on the weekends, among other asks. Fuel shortages have also caused some of Asia's flagship carriers to consider suspending flights. In India, which imports around half of its oil from the Middle East, shortages have started to cause some factories to close or use carbon fuels, and some residents to abandon their kitchens. The cost of gas is so high, we're cooking on this open-air stove, this woman tells us. She is far from alone. People are queuing to fill gas cylinders and fuel tanks across Asia, from Kathmandu, Nepal, to Colombo in Sri Lanka, where authorities there have declared every Wednesday a public holiday for government institutions, including schools, but exempting hospitals, to manage energy resources. What's clear is that countries across the continent are still grappling with supply issues as the war in the Middle East continues.
This is an oil tanker, and the thing to know about an oil tanker is that it's really, really big. 4 soccer fields long, carries 2 or 3 million barrels of oil, and it weighs more than a skyscraper, all of which makes it slow, 10 or 15 knots. That is, no joke, the speed of a bicycle. Our global energy supply lines move at the speed of a Schwinn. And let me show you on this globe why that's important. If you biked all day, how much of this globe do you think you could cross? Like, maybe the width of the point of this pen, right? Maybe. You worked really hard. Okay, now imagine hopping on your 12-speed starting in Dubai. Where's Dubai? Here we go. Starting in Dubai. And now imagine that you have to bike out of Dubai, all the way down here, down the coast of Africa, down, across the Cape of Good Hope, back up the other coast of Africa, all the way across the Atlantic, through the Caribbean, before finally arriving at the deepwater oil port in Louisiana. That would take forever on a bike, right? Which, remember, is the speed that these oil tankers go. Like, that is how our oil travels, as if it were on a bike. And maybe you see where I'm going with this. This is a map of global oil flows put together by JP Morgan. Don't worry about all this text, we'll explain it in a minute. These red lines show the oil coming out of the Middle East, going out to the rest of the world. This is the stuff that's been cut off. Here it is back in December before the war. There it goes, the oil is flowing. But remember, it moves at the speed of a bunch of bicycles. So now it's January, and the oil is just finally reaching parts of Asia and Europe. And we're into February before it hits the US, and then it hits refineries in South Korea that then sends it on down these pink lines to Australia and New Zealand. So when the war starts and the oil stops flowing, there's actually still a ton out there, taking its long, lazy little bike ride around the globe. That's a big part of why things seem weirdly normal. For most countries, the oil shutdown has not reached us yet. We're still getting shipments that were sent out before the war started. So when do those shipments stop? If you look at that map again, it says most deliveries to the US will stop around April 15th. In Europe, they stop around April 10th. Asia, April 1st, so it's just getting started. But here in parts of Africa, it was March 20th. We're already well into it. And that's even hitting places like the US, where we are still receiving oil from before the war started. Countries whose shipments ran out are creating this big surge in demand. So anytime you go to the pump or pay your power bill, you are bidding against them and they are bidding against you. And all of this is going to get significantly worse when China and Europe start running out of shipments too and surge demand to replace it, which is really close to happening.